The broadcast is now starting. All attendees are in listen-only mode.
Hello, hello, everyone. Can you hear me? I just need a confirmation from every one of you in the questions panel. Thank you so much, Paurik, Kenil, Yash, Shaurya, Sashi, Vikant, Venkata, Sophie. Thank you so much for the confirmations on the audio. Uh, so I welcome you everyone to another QuantInsti webinar, and today we are going to talk about how paper trading can make you a better trader. Today's session will be conducted by Rekit. So about Rekit, Rekit Pachnekar, he is a quant analyst at Quantra by QuantInsti, and he has completed his computer engineering. And after his computer engineering, he has done his post-graduation degree in management from IIM Indore. And he researches equities and fixed income securities as a part of the content team at Quantra. Away from work, he likes to read up on outliers in the markets and follow Tesla with a keen interest. So in today's session, Rekit is going to teach us about paper trading and the benefits of these paper trading. So in today's session, we are going to learn about the benefits, obviously, and then how it can make us a better trader. And we'll also share a few techniques on how to monitor your trades or manage risks through paper trading. So without a further ado, I would like to invite Rekit. And Rekit, welcome to today's webinar, and the stage is yours.
All right. Thank you for the awesome introduction, Kshitij. I will just share my screen now. So, hello, folks, and welcome to the topic how paper trading can make you a better trader. Let's see what's in store for us today. Now, first, you'll be given a brief on paper trading. Next, we'll look at the need for a step between backtesting and live trading and why it is a hidden stage. Further, we'll look at some of the reasons why traders prefer paper trading before going live. Next, you'll see live examples of paper trading on platforms like Trader Workstation and Blueshift. Finally, we wrap it up with a few do's and don'ts while paper trading. Also, the purpose of this webinar is to engage the viewers, right? As well as inform the people on the topic. So there's a Q&A session as well. All right, let's start. Now, what is paper trading exactly? In simple terms, you take a notepad and write down the list of stocks you would be interested in buying or selling, and then keep a track of the stocks every few hours or days, however you want to do it. So what I did over here was I took a few of my favorite stocks. Actually, not my real favorite because I wanted to show you guys I have a diversified portfolio. But then I imagined that I bought 10 stocks of each company on the closing price of 2nd July. So for example, Tesla was $678.76 on 2nd July. So like this, I bought these stocks. Now, I just went and came back on Friday and looked at the prices again. And I imagined that I sold it on 9th July. And these were the prices. So Tesla, as you can see, dropped a bit to $656.95. So if you take the difference between them, you would get the profit or loss, whatever you have incurred. So that's it. I mean, that is paper trading in a nutshell. Thank you for coming to this presentation. Actually, no, wait, I'm kidding. That might have been the origin of paper trading, but there's more to it than just noting down all the prices. So before we move on to paper trading, let's take a brief refresher of what is backtesting and live trading for that matter. So in backtesting, you don't have any limitations and you can experiment with various strategies and asset classes as well. Like you can have a strategy which gives you 50% drawdown, but then your returns are 400 plus percent. So you're okay with it. You're like, okay, fine. I am confident. I want to test this out in the live markets. So only when you're confident, you move on to live trading. Now, this might seem simple, but to go from theory to practice can be a bit daunting, right? So now coming back to backtesting, you don't have any money on the line. You will say that okay, a $2,000 loss on $10,000 capital is like fine, but then the returns are four times. So you'll be okay, I want to do this. But in live trading, you have your own hard-earned money on the line. Like a $2,000 loss of your own hard-earned money can be a bit nerve-wracking. So to help you move from backtesting to live trading, there's a small step which not many people use. So that is paper trading. But why do traders paper trade? There are a few reasons actually. The first one is confidence building. Now, let's take the previous example. If I had backtested a strategy and it looks awesome, like I got 400 plus returns in 3 years, but then I got a drawdown of 50% at one point, which was a bit worrisome. But then again, I said, okay, that four times returns is enough to make me say that, okay, this is a good strategy. I want to do this. I want to go live with this. But a small part of your rational brain will ask, like, is it really? Can we do something else to build your confidence? So paper trading is perfect for this. You're using the strategy on live data, but it is not your real money. Another reason is to check for deployment issues. So maybe your strategy is good, but are the orders getting filled entirely? Is there a slippage or something else which is happening? Are there any bugs which is stopping your algorithm from putting the order in? So this way, these and other issues could crop up and it's better to handle them before going live. So with paper trading, that will help you out. Also, backtesting is one thing, but live markets can be a different story. So paper trading will help you understand, is the strategy performing as expected? Like, is the strategy of 20% annual returns giving me the same returns in, let's say, a 3 month period? Is it giving me 5% or is it giving me much less? So paper trading will help you work out if the strategy is performing as you expect or not. There's also the impact of other costs. Now, of course, you will say that you can add the slippages and commissions in your backtesting scenario. But how does it work in the real world? Like, how are the orders getting filled? If I place an order of 100 shares of Apple at $146, in backtesting, you might think that, okay, all the 100 shares are getting filled at the same cost. But when it comes to live trading, maybe only 50 shares were bought at 146. Then Apple price increased to 146.5. And then the rest of the 50 shares got filled at that price. So in paper trading, it will help you understand how the costs are. And now, while paper trading helps you understand the market, but it also helps you understand yourself. Now, what do I mean by understanding yourself? This is not a philosophy lesson, right? So, you know that fear and greed can drive your decision making process, and it should be kept in check, honestly. So, let's take an example of this, shall we? So, this is a price graph of Apple, or rather, the split adjusted price graph of Apple. Let's say you invested in Apple at $50 on May 2019 and you were amazed when it crossed $80. Like that's an awesome trending stock, right? But then the markets can be something else. In 2020, COVID-19 spread like anything and its effect could be seen on the markets too. A free fall from $80 to 56 in barely a few weeks, a 30% loss. So what do you think? Would you have stayed or cut your losses being there in April 2020? Now, sitting here in 2021 and knowing what happened, it looks like a no-brainer to stay the course, right? It not only came back to $80, but surpassed it, and now it is near 120 to $140 for the time being. But in 2020, you don't have felt so confident. Thus, these are a few reasons why people prefer paper trading before moving on to live trading. So you can say, in a way, that paper trading is a bridge between backtesting and live trading. Now, there are quite a few paper trading platforms, and depending on your geography or the market you want to target, you'll find brokers who have a paper trading platform as well. For this exercise, though, we'll look at two platforms: Interactive Brokers Trader Workstation and Blueshift. Let's see the Trader Workstation first. Now, this is how a typical window looks like for the Trader Workstation. And you can see that there are a few stocks on the right: Apple, Amazon, Alibaba. You also have the Forex. And you can see the price graph over here on the left side. And over here on top is the order window. Let's say if I wanted to buy Tesla, I could have bought it over here by clicking on buy or sell. Now, this is a static image, and you know that you're here for paper trading and you want to see something live or interactive. So, what I did was I downloaded the Trader Workstation app from the website, and let's see how it is. So, over here, you can see this is the login screen for Interactive Brokers. Now, if you already have an account at Interactive Brokers, you can select live trading or paper trading, put in your username and password, and just click on paper login, and you'll be done. But even if you don't have an account, Interactive Brokers has this awesome thing called as a demo account. So you just click on return to the demo. All you need is the email ID, and you just click on try demo. So a little brief on why I chose IB. Like, mostly depending on your geography, some brokers would give you a paper trading platform. But then Interactive Brokers has a support for quite a few geographies as well as asset classes. For the demo account, it might not have support for Indian stocks, but you can still see them over there. All right, now you can see that it is loading up. And as we had seen in the image, it has been populated with a few of the popular stocks. Now, let's say if I click on Google, now over here, you will find that this is the delayed data. So for a demo account, Interactive Brokers provides delayed data. So that shouldn't be much of a problem as such. Now in this price graph, you can actually select how you want to see. Like if you want a candle size of 15 minutes, you can click that as well. And you'll find this. Otherwise, if you want a time period of, let's say, just today, 5-minute candles, you can do that as well. Let's keep it at 15 minutes. All right. So now, if I were to buy this, like let's say Google is a good stock, I want to buy it. You can see on the top part, there's a window which has selected Google, and you have buy or sell. And over here at the bottom are a few details. That's the awesome thing about Trader Workstation. You have like the bid ask, you have size, you have the high, low, and all these sorts of things. Let's say if I had to buy Google at market price, let's say 100 shares. Now over here, I will click on market because I want to take it at the market size. Now, one thing would be that since this is delayed data, your order would not be filled right now. So when I click on submit, you get a dialog box that are now displayed in shares and it might take time. So you click on override and transfer. So over here, you will find that it will be entered in. Now what I'll do is I'll just again try, let's say I want to check the euro and USD. I'll click on that part. Again, you can see the candlestick graph over here. Let's say I want to buy like a lot of 20K. I click on this one and I click on submit. You click on transmit over here. So now here I got that this order has been filled. Accordingly, if I wanted the pound and USD, I would have clicked on buy. I would do the same thing, market, and I click on submit. So this order has been filled. Now, when it comes to paper trading, obviously you want to know like how it is going, right? So on here, up here, portfolio is seen. You can click on it and you can find a nifty little chart which shows your assets which you have taken, your positions, the market value, and the last change. So since both were falling, the last change is negative and it's in red. But then when we bought it, this one is at $6. Like I got a profit of $6 over here. Well, yay, that's awesome. And but then this one is at a loss. So overall, the loss is $95. So in this way, you can see the paper trading. Now, right now, I haven't exactly used my own capital. So I can talk to you with a clear mind and I can be relaxed. But if I was actually live trading, I would have thought, okay, like in 1 minute, I got a loss of 92. That is frankly a bit scary. But then paper trading helps you out in that way. So according to your strategy, you can select the assets which you want, and then you can monitor them every now and then. Now that was one part. Uh, Another thing to add is that Trader Workstation actually has support for algo trading. So if you want to use your own strategy, you can use the iBridge PY module and you can connect it to the Trader Workstation, and that's it. You can even paper trade using that. I would have showed you an example of that, but frankly, it takes a lot more time than the time we have right now. So we'll move on to the next one, which is Blue Shift. Now for Blue Shift, what I have done is I've taken one strategy from swing trading course on Quantra. So this is called the MACD swing strategy. The MACD stands for moving average, convergence, divergence. And it is a simple technical indicator, but very powerful, I should add. And what I've done is I've just kept a flow chart over here, like to help you understand what the strategy is. So initially, we take the data, we take the closing price in this case. Now we'll see that we'll calculate the MACD line and the signal line. But before that, we first check, is there an open position? Now, initially, if you're starting the strategy, obviously there'll be no open position. So we go over here on the left. We calculate the MACD line and the signal line. And then we check if the MACD line is more than the signal line. The signal line is somewhat of a moving average, whereas the MACD line is a technical indicator. So if it goes above the signal line, it means that the asset is starting to appreciate in its price. So we buy the asset. If it is not above the signal line, it means that the asset might be declining. So we do nothing over here. So that is one part. But then if there is an open position, we go on the right. And over here, what we do is we have already set a stop loss and a take profit target. We check if the current price is less than the stop loss. For example, if we had bought Apple at $146 and our stop loss was set at, let's say, $140. Now, if our current price is $139, which means it is less than the stop loss, so we'll exit the long position, which means our stop loss threshold has been hit. We should get out of that position. On the other hand, if it is above, and if the price is above a take profit target level, let's say I had kept it at $160. Now I can be optimistic about Apple, right? So, and even then the price increased more than 160. So we'll exit the long position and take the profit. If none of these are met, you'll say that, okay, don't have to do anything. Now, this was the MACD strategy. Uh, let's go to the notebook of the swing trading course so that you can understand how the strategy looks like. So what I do is I have come here on the Contra portal. I have already logged in, but if you haven't logged in, you will get a notification to log in with your email ID and a few personal details. So that is just a 2-minute sign up process. That is fine. Then you can go here and you can do swing trading. You can select the swing trading strategies course. Now, since I've already logged in, I can resume the course. But if you hadn't logged in, we have a free preview with a few sections for you. Now you can see over here, there's a free preview button, which means that these sections are, you can see them just by logging in. Otherwise, swing trading is a paid course. But you can see that there are a lot of sections which have the free preview on it. What I'll do is I'll go a little bit down. I see over here swing trading strategy backtesting, which is a MACD one. For the time being, I've already loaded this. So you can see the notebook over here. Now, as I had said, the flow chart. So what we are doing is we are reading the price data. The price data has already been saved in a notepad. Now, I wouldn't go too much into the Python code, but I'll just skim through it so that you get a feel of what the strategy does. So I've taken the strategy, I've taken the price data. You can see that I have taken the last 5 days data, and you can see over here, actually not the last 5 days, the minute data basically. Then you can see the entry signals. As I had said, you will buy if MACD line is more than signal line. The exit signal, there are three actually. One is the technical indicator if it crosses below the signal line. Otherwise, if it hits your stop profit, if it hits your stop loss, sorry, or the profit target. And another one is we had kept it, if the position is held for a month, you'll automatically close the open position. I ran this strategy and I saw I have also taken like transaction cost and slippage over here just to simulate the live environment. And I ran this strategy and I saw what the profit is, what the profit and loss is. I plotted the equity curve. Now you can see over here that, okay, this is great. Like if I had started at 0, it is 175. Like this is awesome, right? I mean, in just 11 years. Let's say I'm confident and I want to go live on this. So in the swing trading strategy course, there's already a button over here which gives you, which goes to the live trading part. But I've already loaded that. I've just clicked on it and I'm here on the Blue Shift platform. Now, don't worry, guys. If you want to see the notebook, you can check the notebook later on. We'll share it with you guys. But for the time being, let's see what paper trading is for that matter. So here is the MACD swing strategy. What I'll do is I'll just take the data set, which is NYSE minute. Now I want to show it to you guys very fast. Like I don't want to waste your time in running the strategy. So I'll just go to 2021. I'll go to July, the 1st, and the end date the 9th July, a capital of 10,000, and I'll just run it. So you can see over here that it is running. And if there are any errors, they will pop up. But for the time being, nothing is going on over here. And let's wait for a few moments before it starts. So I've already loaded this strategy, right? And once it is done, we can go live on it, right? So I have already have I already have one strategy, which is the RSI strategy. What I'll do is I'll go here. I ran it for 2 days. All right. So RSI strategy is similar to the MACD strategy with similar parameters. Over here, you can see the profit and loss. Here, over here, we got a profit of $10,200, 33. So that's a profit of $233. That's great. You can see over here the assets which were taken. Apple was taken 70 shares for a total of 10,000 and 4 shares of Google for a total of 10,041. So these were the positions taken. And if I have to download all the performance, I could download it over here. And for the time being, I've already downloaded them and kept it for us. So here you can see it over here in paper trading. You can see the performance of that strategy. You can see that for 2 days, a Sharpe ratio of 11, a value at risk of 1. So this is great. You can also see the real performance. There were 2 trades taken, a leverage of 2. The cost was this. The cash taken was this, and the total unrealized value, $233 for the next day. So this is how you can monitor your paper trading strategy, or you can paper trade your strategy. So all this is great, right? I mean, let's get back to the presentation. So I kept the backtesting of Blue Shift over here. You can see that the RSI was at 400% returns and the Sharpe was at 1.14. There was a drawdown of 50%, but then as you can see that in 2 days, you got a profit of $233, which is great. Now, before we actually start paper trading, there are a few things which you should keep in mind, right? I mean, there are always a few do's and don'ts. Now let's see what that is. Now, paper trading is still trading without your own money. So unless you have a strict mindset that you are going to treat this exercise as if you are trading live, you'll get nowhere in paper trading. You have to take this seriously. If I have $10,000 in my paper trading account, I should treat it as my own money and I should trade it wisely. I should, if my strategy says that you should buy tech stocks, I would buy the tech stock. I wouldn't go crazy and buy something else, right? The next point is your capital should also be realistic. Just because FANG stocks are trending, when I go live, I can't just buy all of them together. Or for that matter, I can't just, if I have $10,000 in my own bank account, I wouldn't open a paper trading account of 1 million, right? I mean, there are a few brokers who provide that much in their paper trading account, but you should keep it realistic. With the capital as well as the portfolio, you wouldn't go after penny stocks because just because it is not your real money. You should trade according to your strategy. All right. And When it comes to live market, sometimes your order may not be filled entirely. Like I spoke earlier, there will be times when you won't get the order filled at the same price as you had put the order in. So that should be kept in mind before you do that. Now, also, please do not change your strategy midway. Just because things went south for a few hours doesn't mean you have to tweak the parameters right there and then. Let it let it run its course, see the impact, how it was, see whether it was a temporary thing or whether the strategy made up for it. Or in the worst case scenario, if the strategy is deteriorating, you should just cut the cord, go back to the drawing board, see what went wrong. Paper trading is for that actually, like to know whether your strategy stands up to the live market or not. So you can go back, you can change the strategy, then the strategy parameters, and then come back, try paper trading again, and see what the effect is. But do not try to change the strategy midway. Now, to get the most out of it, you should check the performance regularly. What is the PNL? What were the number of trades? And this will help you understand how well it is performing and give you the confidence to go live or to shut everything down if it is that way. And finally, know when to go live. Now, here's the interesting thing. A lot of people uh, ask, like, okay, fine, I backtested my strategy. And like you said, I tried paper trading. But when do I know that, okay, this strategy is good? I want to go live. Some people would be confident on the first day itself. Some people would still take like a week or a month before they go live. So, when is the right time? So a few people, they keep it according to the number of days or weeks for that matter. They will try out their strategy for like 2 weeks or a month, see how it goes, and then go live. For others, if it's a very low frequency strategy wherein the trading strategy places order like once every week or something, like at the start of the week, then they would think, okay, let it trade for like 10 or 50 trades, see the impact, see how it is going on, and then they would trade. So that is a bit subjective, and you should know when you will go live for that matter. Great. And this brings us to the end of the presentation. Like, I hope you understood a few things. I hope you got what you needed. And I'll just open it up for the question and answer session. And yeah, that was the presentation.
Thank you, Rakit. Thank you so much for sharing the entire paper trading thing and taking us through all those notebooks and explaining the basics over multiple platforms. So it was really helpful. Before we start off with the Q&A session, I think I would just want to share these coupons. So we, for all of those who you are attending here, we have a special discount for you on all the Quantra courses and learning packs. So I just shared the link and coupon codes with you on the chat. So you may find them interesting and go check them out and feel free to enroll in any of these courses and learning tracks. All right. So to start off with Q&A, I would like to tell everyone before that this session will be recorded and shared with everyone after the webinar is done within the next 24 hours. The links of the recording will be shared with you over email. And now that we start to open the stage for questions, please share your questions in the questions panel, and we would be picking them up one by one. All right. So, Rekit, first question. Do you want to pick one, or shall I pick one for you?
Uh, there's one interesting question. Does Zero the Kite support paper trading? So, an interesting thing over here is Zero the Kite does not support for now, but then it will have plans to do it later on. And for Indian, so there's another follow-up question to that. What are the other tools that support paper trading in Indian equity markets? So, as I'd given the example of Trader Workstation, it actually supports the Indian market, but you'll have to uh, take an account with them. There are a few rules like how it is, and they take a few personal details. But then it is super easy, and you can easily uh, open an account with Interactive Brokers. It is just like any other broker, just like Zerodha or for that matter IIFL. And once you have done that, you get access to the paper trading platform, and then you can do it in the Indian equity markets. Also, there are a few other websites which I might not be so confident about, but even they have paper trading like functionality in them. uh, I mean, I think a Google search would give you that. What why I had given Interactive Brokers is it has support for like automated trading. So you can have your strategy, you can connect it to the IB platform, and you can paper trade it as well and see how it goes. Other brokers might not give that support. So that is one question. And there's another one, how much data is ideally required to backtest a strategy? Uh, Interesting question. So it depends. So if it's a intraday strategy, it will be different. Like you'll have to get a minute by minute data, and that could go for a 1 year or more than that. You can backtest it, see how it goes, and then go. If it's a if we are planning a daily strategy, then you could take it for a decade, 2 decades. Some people do it for like 4 decades as well, but that would be too much. But then you have to understand that the market at that point of time was different than it is right now. So thanks to the COVID pandemic, the markets are a little volatile right now. So what if you had backtested your strategy like for 10 years, it would be different. The performance would be different right now. So that is, I hope that answered your question. So yeah, that
Nikhil,
is one question.
before we pick another questions from GoToWebinar, we also have got a few questions on YouTube. So I would like to pick one
All
from
right.
there. So on YouTube, Akshat Goel asks, "Sir, can we trade the USA stock options from India? In India, we do not have the weekly expiries on stock options." He asks. So can we help him out?
Right. You'll have to, if you have an ICICI direct account, you could do for the international markets. But for options, it is a bit tricky, and you'll have to check with the broker uh, before you can actually trade them.
Okay, so
But
this
it
is
is a
more of
bit
a
dicey.
broker specific. Like you have to check with broker if
Right.
they provide
Yeah.
services or not. Okay, wonderful. So thanks. I think we can pick one from GoToWebinar now.
Yeah. Uh, so there's one by Anand. What is Blue Shift visual programming? So uh, let's say you do not know anything about programming, but you know a few rules. Like let's say that I know a moving average strategy. I know that Uh, I take two moving averages, short and long. One moving average is of 20 days, one moving average is of 50 days. If the 20-day moving average goes above the 50-day, you would think that it is above. And if it goes below, then it is trending downwards. I know this logic, but I do not know. like how to code it in, let's say, Python, for example. So for these people, we have Blueshift Visual Programming. It is a work in progress, but it gives you the code in blocks. Basically, if you can pick the simple moving average from one part, you can put in your rules. What is the period? What is more than, do you want 20 more than 50 or 50 more than 200? Depends on you. And accordingly, you can put the signal in. And it is a visual way to code basically and backtest your strategy. It is really nifty and awesome, but you will have to try it out, work on it for a few moments before you understand, okay, this is how it works. So yeah, that is Blueshift Visual Programming. And yeah,
So related to Blueshift visual programming, I would like to share that we have a tutorial, a basic tutorial on this visual programming on Blueshift. You go to our YouTube channel and on youtube.com/QuantInsti and just search for visual programming and you'll see the entire list of tutorials over there. We have also recently conducted a workshop, algo trading workshop, where we showcased. So one of our colleagues, Jay Parmari, showcased how entire visual programming thing works. So there are different blocks and with pre-built technical indicators, you can assign those values and then you can put them together. And then it's not just visual. If you really want a Python code of this entire strategy, that is also possible. So you build everything visually, and then you can also that entire logic can be will be coded in the backend and then you can download the entire Python code and make the adjustments accordingly, and then you can utilize that Python code anywhere on any other platform that you want. So feel free to check out those tutorials on our YouTube channel. So
right.
next one, any preferences, Rekit, you would want to pick?
Yeah, I'm just looking at it. Uh, so Kenil has asked, I'm a swing trader who wants to keep the position open for 3 to 5 days. What should be the time period to backtest my strategy for optimal results? Actually, it's the same answer I would like to give as it was before. Uh, it depends on you uh, how much time period you want to go to. Some people do it for 5 years, some people do it for 10 years, but make sure that it's the same strategy. And if you are changing a few things, like run the backtest again, do not think that, okay, this gave me a return of, like, let's say 200%. So instead of keeping the position open for 3, I'll keep it for 2 and expect the same result. That won't happen. You'll have to, like, make sure that you run the backtest again, see what is going on, and then actually like go live for that matter. So that is one question. Yeah.
Okay,
Uh,
meanwhile, I have also shared the link to the list of tutorial videos for BlueShift. I think there are quite a few questions related to BlueShift visual programming. So I just copy pasted them in the chat box and you people can access them.
right. So here's an interesting thing. What is step-to-step guide for algo trading? Uh, so we have quite a few courses, like free courses, when it comes to like getting the basics of algo trading. But the gist is you should have a strategy first. You should know what you're doing. Like, for example, now, obviously, this is a very simplistic example. Let's say I take the MACD indicator itself. Like, I say I calculate the MACD and the signal line. I check whether the MACD is above the signal line, I'll buy. And if it is not, I'll exit. And the same thing for that stop loss and take profit. Once I know the logic, I will code it. Uh, Most of the traders prefer Python, but you can do it in any programming language of your choice. Python is simpler if you want to start out, but not a recommendation or anything. But let's say I did it in Python. I coded the strategy. Again, like I took the data, let's say from Yahoo Finance for that matter, the last 10 years. Because I think like after the housing market collapse of the US in 2008, things started to like pick up and the market went up. So, and I'm trying it on the US markets for that matter. So I test it on the US markets for like 10 years. I see how it is. This is the crucial step. I will compare this with, let's say I got a return, like if I had invested $1,000 in this strategy for 5 stocks and I got $5,000 at the end of the 10-year period. I would still think, okay, this is good, 5 times returns. But then I'll compare it with the benchmark, which is the S&P 500 most of the time. And if you see, okay, if you say that the S&P actually went up 10 times in these 10 years, so your strategy is sort of lagging in that respect. So then you'll go back to the drawing board and see if you can beat the benchmark. Why do you beat the benchmark? Because if it can't, then you would rather just invest in the ETF or like a mutual fund or something and relax and take the returns. So once that is done, you check there are other performance metrics as well. The Sharpe ratio, some people take the Sortino ratio as well. Your drawdown. A drawdown is the maximum drawdown for that matter is very important for some traders. I mean, imagine you had $10,000 and a drawdown of 50% in your strategy. So at one point, you'll be down to $5,000. That takes a toll on your brain, and you think, okay, like let me just get out of this and at least save $5,000 at least. But then that is up to you how your risk profile is. So drawdown can be an important factor. And once all these is done, and you are fairly confident that your trading strategy is good, you think about going live. But before that, you obviously paper trade for a few days, weeks, or months, however the time period you want, and then you go live if once you are confident and you have taken all this into account. So this is roughly the step-by-step guide, and Contra has a few courses on the basics of algo trading. You can check them out. You can also check blogs on algo trading if you want to see them. And yeah, that is about it for that.
So adding to that, you
So
can simply go on Google and search for free algo trading learning resources, and you will come across a QuantInsti blog that lists out all the free courses, all the free books that we have published, and you can also see various aspects of algorithmic trading, from basic algorithmic trading to basics of Python, basics of machine learning. So there is a variety, like a wide range of topics that we have covered through various free resources available. And just with a Google search, you'll find it. And that can help you with a proper structure, that what are the aspects you need to take care of or you need to learn to get into algorithmic trading uh, in a step-by-step manner. So please do check out that blog that we have published on our website. Also, so before we pick another question, I think it's time to pick one question from YouTube. So on YouTube, Jay Devan asked, I have a strategy and I want to implement using algo. How QuantInsti or Blueshift will be of use to me? So, Rikit, can you help him out?
okay, if you already have a strategy, I mean, awesome. That is really great. Uh, if you are talking about how to go from creating the strategy to actually trading, you would see that first you will code it. So when it comes, if you're going the algo trading path, If you're going manually trading, then you can just have a strategy and you can read whatever, however the strategy is, and you can place the order manually. But if you want to go to the algo trading side, just like join the dark side. But yeah, if you want to go to the algo trading side, you will backtest your strategy first. For that, you will code it in whatever programming language you want. Mostly people prefer Python. So you'll code it in Python. You'll backtest it to according to a certain time frame. You'll also select the assets which you want to trade in. So for most of the people, they would think, okay, equities are the only thing. But then there are commodities as well. There are even index funds for that matter. And why limit yourself to one geography? If you can trade in other geographies as well, or even asset classes. Forex is one for that matter. So in that way, once you have backtested it and you are confident enough, okay, my strategy is good, it is really awesome, then you'll pick a platform. Uh, Blue Shift is one platform which has support for equities and forex. You can create your strategy on Blue Shift and you can first backtest it and then paper trade it as well. Right now, we have paper trading support for US equities and forex. That is it, and more support is being added as and when it is. And once that is done, you will go live. Now, where QuantInsti comes in. So, first of all, if you already have a strategy, you'll be thinking in what field it is. By what field it is, I mean that what is the class of that strategy. Now, there can be some strategies which are mean reverting. There are some which are momentum or trending, basically. There are, you can also have machine learning as well. You can also have a strategy based on sentiment analysis. So for all this, QuantInsti has all these courses. If you want to refine your strategy, you can take up any of the courses and you can see how it is, how you can better it. We also have a community as well to support, like if you get stuck in between. So we'll help you out with that. Once that is done, you can go live. So we have a few modules for iBridge PY, which is the API to connect to Trader Workstation. So using that, you can like connect to the IB platform and you can start live trading as well. That is one part. And if you are a newcomer and you want like from the start, you are interested in trading, but you don't know where and how to start off with. And like obviously there are a lot of free resources on the internet. Like you can just Google anything and you'll get it. Right, that is one thing. But then if you want a course or something which can help you out from the start, like right from the basics of finance, from trading the markets to the strategies, types of strategies for that matter, machine learning, sentiment analysis. We have another product called the EPAT, which is a 6-month program, and you can enroll in that as well, and you'll get everything. Like you'll get live lectures, you'll get a support manager which will help you out along the way, and you'll also have access to like industry experts who will help you out with queries or anything for that matter. So that is where QuantInsti can help you out with. We are more of a guide and a guidance for you. We are not exactly people who will give you tips. Like we are not going to tell you, okay, this stock will increase in the next 1 month, so go ahead and buy this one. QuantInsti never does that. But then if you want a strategy and if you want guidance on how to implement that strategy, you can go ahead and call us up on contact, or you can email us and we'll get to you. So that is where QuantInsti comes in. I hope that answered the person's question.
Yes, yes, yes. I think Jaydevan's question is answered. Uh, One more question. So Karan Dalal asks, how long should we paper trade before we go live? So
So, yeah, like I said, let's say if I had a strategy which like 15 minutes after the market open, it checks the data for 10 stocks. Or, okay, let's just keep it for four stocks, the FANG stocks basically. It takes the data of these four. It I have a very secret and very secretive strategy which does a few things here and there, checks the performance, and then it gives me a signal of buy or sell. And every day it gives me one signal whether I should buy or sell. I'm keeping it very simplistic. So what I can do is I can run this strategy for like 1 month, which means in 1 month there are like 4 weeks and every day 5 days. So I get 20 days worth of signals. I see the strategy, I paper trade it, I see the performance. Now, in my backtesting scenario, maybe I had got 12% annual returns. So, in 1 month, I'll say, is it giving me that much? Is it giving me 1% return? Or is it like a compounding thing? It gives me less right now, but it gives me more. So, I'll go ahead and I'll wait for 2 more months and then I'll see whether it has picked up or it has deteriorated. So, it actually depends on you. How confident are you with your strategy? Now, with 1 month data, like I saw that, okay, it gave me like much better than the expected returns. I got like 5% returns in just 1 month, which is great. I think, okay, like I am confident enough and I'll go ahead. So I'll live trade. But for another person, he would think that, okay, FANG stocks are actually trending right now. Even if you had just done a buy and hold strategy, you would have got the same result. So you would say, I'll wait till the market actually has gone down or not. I'll see how the strategy reacts to it, and then I'll go live on. So, frankly, I know I'm beating around the bush and not giving you a definite answer, but then that is actually how people trade, how people go about paper trading. They will, unless you're confident enough, you would keep on monitoring the market and you will see how it is, and then you'll go live. Some people think it's an opportunity cost actually. Like 1 month I'd got 5% in my paper trading. I would have been like, damn, like if I had actually invested my real money, I would have got 5% returns. So I'll straight away invest the next day. So it depends on you actually, how good you are and how confident you are with your strategy. So yeah, that is the answer.
thanks, Akit. So I think we can now pick a few questions from GoToWebinar as well. So just to again remind you everyone, this webinar is recorded and will be shared with everyone over email. And we now have just 2 minutes left, so we'll try to pick a couple of more questions. And for those of you who have asked questions, but somehow we are not able to answer them during the session, please make sure that you share those questions in the survey at the end. So when at the end of the webinar, you'll get a survey where you can share all those questions, and we'll make sure that all your questions are answered. And yeah, so Beckett, we can pick last two questions.
So there is one, you mentioned drawdown and Sharpe ratio. Please focus on that. So interesting. Drawdown is basically a term wherein at one, for drawdown, let's just expand on it and let's say the maximum drawdown. Now I will just go to the slide and let's take this one. So you can see here a drawdown of 54% has been mentioned over here. So, and if you check the graph, the blue line is actually your strategy equity curve. The yellow line or the orange line is the benchmark. So it did better than the benchmark by a huge margin. But then at one point it did go down a lot. So at one point it touched 22. $22,000, let's say, and it went down up till 12, which is roughly half, right? I mean, half of your account balance went down over here. So that is the drawdown, which we call it. It is the difference between the maximum, the peak, and the trough, the lowest point. So over here it is 50%. So you would say this is a drawdown of 50%. Now, as we go more ahead, you can see over here it at one point it touched 37 500, and then it went back to let's say around $26,000. So over here it is around $11,000 of loss, or let's say a decline in your portfolio. But then this 11,000 upon the 37,000 is different, right? So that would be a different thing, and this is a different. So we'll calculate the maximum drawdown, and over here the maximum drawdown is 54%. So that is drawdown. The Sharpe ratio is interesting. It is used by traders to actually compare the performance of your investment with a risk-free asset, basically. And then you like, so basically it is the difference between the returns of your investment and the risk-free return. Now over here, what is the risk-free return? So most of the times people use government bonds as the risk-free asset because a government rarely defaults, right? Okay, now you might be thinking there are a lot of countries which have defaulted on their sovereign debt. But then let's just, for the time being, think that, okay, like a government will not default on its own government bonds. So that will be a risk-free asset over here. And the difference between the two will actually give you the Sharpe ratio. The Sharpe ratio, ideally, you would say that the higher the Sharpe ratio, the better. It means that you are taking risk. Now, obviously, this strategy uh, is a risk-based asset, a strategy, because you can see a drawdown of 54%, right? But then, so why a Sharpe ratio should be high? It is because that risk you're taking, you should get the appropriate returns. Otherwise, why would people go for a trading strategy? They would just buy and hold, or they would just buy government bonds and sit at home and get the returns, right? So that is the Sharpe ratio. But it doesn't mean that a strategy with a higher Sharpe ratio is supposedly better than a strategy with a lower Sharpe ratio. That doesn't happen because while, so let's say this one is 1.14 and the MACD is giving you 8.7 Sharpe ratio. So you would think that this one is better, but then the risk is also, the risk could be greater over here. Now this is for just 1 month. Like if you had back tested it for a longer time period, it would have been a different story. So usually people feel that, okay, the Sharpe ratio higher the better, but then it comes with a pinch of salt. You should know that a higher Sharpe ratio would also mean a higher risk, basically. So that is, yeah, the difference between drawdown and Sharpe ratio.
Thanks for such a detailed
So,
explanation, Rikit. I
yeah.
think it was very helpful. So one last question. So I think we are over time, but yeah, as I promised, I think we have to pick one question. So one last question.
Okay, I will just go through a few. Uh, so there is one which is please share the webinar on email address. I think Kshitish, this webinar would be recorded and sent to the participants.
Yes,
So
yes.
that
The
is there.
recordings will be shared with everyone. Yes.
Yeah. And uh, can I trade Nifty in paper trading? You would have to make a few modifications in the sense that Nifty is an index. You can't exactly trade an index. But then there are a few funds which trade on that. Or what you can do, a workaround would be take the Nifty constituents, build the portfolio which mimics the Nifty index, and you can paper trade on that, see what is the performance, and then accordingly go live with it. So yeah, that is one workaround. But then the Nifty, since it's an index, you can't exactly paper trade on it directly. Yeah,
Okay. So again, thank you so much, Rekit, for giving out such a wonderful presentation and taking us all of us through paper trading and on two different platforms and answering so many of these interesting questions. And I hope it will be a really helpful and knowledgeable session for all our audience. As I already mentioned, the session is recorded and will be shared with everyone over email. And I have already shared a coupon code in case any of you are interested in any of the Contra courses. We are offering good discount on learning tracks and courses as well. All right, so you can please make sure that you use these coupon codes and get this hefty discounts that are available just for the webinar participants. So you make good use of them. And with that said, I think I will conclude this session and I'll catch you again in the next one. So till then, have a good day ahead. Thank you, everyone. Bye bye.
thanks, Yatij. Like, thank you for joining us on the webinar. Bye.
Thank you, Ricky. Bye.